Okay, so putting it all together, we've got the daily charts that tells us that often the days open near the highs or it opens near the lows. And if you can get in a trade near the open, then sometimes you can ride it the whole day. So that's the gist of the whole trade. But getting into the trade, you want to look for the open bar. If the open bar is a directional bar, i.e. it opens near the low and closes near the high, then you want to look for an entry signal. And the entry signal is when we break the high or the low of the bar in direction of the open bar direction. So this right here is textbook example of an open bar that's directional. It closed all the way into the highs right here. So that's a directional bar. That's what we're looking for. We're looking to buy a bull directional bar if the second bar trades above the high of the open bar. So the open bar gets to be a signal bar. It can be a signal bar to buy, it can be a signal bar to sell. In this case, it's a signal bar to buy. So you want to buy above, put your stop below. And you want to manage it for as long as you can. And management, I'm gonna make another video on that. Management of the trade is more discretionary than just this mechanical signal that you're getting, that you get of the open.